housing market has been strongly supported by the Fed's massive $3.5 trillion bond buying program, or QE, quantitative easing, which officially came to an end yesterday based on indications that the economy has sufficiently recovered. Well, joining us now to discuss this is housing expert Jeff Tanenbaum with Halstead Property. Jeff, good to have you on the show.
Thank you for having me.
Jeff, the official data is that GDP for the third quarter is up at 3.5%. Do you think that the economy is on solid footing?
I don't believe the economy is on solid footing, but I will state that the economy is doing better. We had a devastating 2008, and we are still recovering from it. We're not to the point of where we would like to be, but things are looking up.
Well, one of the big backbones of GDP is consumer spending.
Right.
It makes up 70% of GDP. As we just saw in Karina's report, Americans are spending more. In fact, consumer debt is now at $3.2 trillion, a new high. Now, keeping in mind that part of the Fed's plan was to get stimulus in the economy, to get consumer spending, to get more debt, are we not repeating the same cycle, given it's that consumer spending and debt that got us into the financial crisis in the first place?
Americans are spenders. They are not savers. We don't have any real crisis, if you will, at this moment in time that people are concerned with. They are spending because we have more people employed, our job growth has been substantial, and we are seeing that if they can't afford to buy a major high-ticket item like a home, the housing market has shut quite a percentage of Americans out with our low inventory and our high level of pricing. Then these same people are working every day, they want to spend money, but they're going to be buying the consumer goods versus the larger, more worthwhile.
And getting potentially into more debt.
Right.
And we could be back at square one in a number of years.
Without a doubt.
All right, well, let's focus on the Fed and its decision that the economy is looking strong enough to end QE3, quantitative easing. What impact is that going to have on the housing market?
Well, my thinking really is that the Feds might be premature. I want to see the mortgage interest rates stay pretty close to where they are. I'm hoping they will, for new buyers coming in, et cetera, refinancing, whatever. I think that they will be going up with the Feds ending their program. I'm only hoping that it does not escalate substantially, because right now we are still, even if we went up a little higher, at a level of a mortgage interest rate that is doable.
So you think it's potentially too soon?
I think it's too soon.
Well, even with QE3 and the near zero interest rates, people were struggling to get home loans. In fact, a couple of weeks ago, former Fed chairman himself, Ben Bernanke, said he couldn't get an application to refinance his own home. So what is it telling us if the banks are still not lending?
There's a recovery in relation to the mortgage crisis we had back in 2008. I remember distinctly, homes were being lent money, 150% of their necessary worth. We had a very bad time. I think that the banks will start, and I hear this quite often from my own mortgage guys who I use, the banks are releasing more loans.
Even as we wind down QE3 and interest rates go up, you think we're still going to have more lending from the banks?
I think the banks were prepared for the QE3 dropping. I mean, you know, the QE3. I think they were prepared for the Feds ending the program. I know before that they were not as tight in their lending. I don't know what happened to Bernanke. It's his thing, but I do think that we will see an increase in mortgage rates. I'm hoping it's not substantial, and I think that we will see more people buying because prices are coming down.
Still, Jeff, home ownership in the U.S. at a 19-year low. What does that tell us? What can be done about this?
What can be done about it is educating our population to the word saving. Where is the problem coming from? Yes, the prices are high. That could be cutting people out. Yes, the inventory is low. I can't compete. But if they don't save for their down payment, which no one can give them, they will very well find themselves not be able when the time comes, and even things are better to do the right thing.
Jeff, is the housing market a consideration for Americans in the midterm elections? We know the economy is,
right.
but is their ability to own or not own a home something that you think they look to when they go to the polls?
I don't see midterm elections as exciting or as interesting or as polarized as a presidential election. I just don't. So I think people may vote along their party lines. Historically, my family's been Democratic forever, so I'm voting Democratic. I don't think the housing concern will make that much of a difference unless it's a locale where this issue has become an issue. And then people will be polarized basically in that particular region to vote for one or the other.
All right. Thank you for your insight. Housing expert Jeff Tanenbaum with Halstead Property.